The market's in an itsy-bitsy little gully right now. It's like everybody said, okay, that was crazy, let's just all calm down. I sold that house for $350 the year it was built. 2 years later, $480. Then $585 maybe 18 months ago. This couple bought it for $650 last year. He'd let it go for that. Hi, John. No. It will break his heart, but he'll let it go.
Why is he selling?
Neither one's working right now.
Marlene, you'd say they're motivated, right?
As motivated as one can be in this neighborhood. This house on the left, I'd say they're probably motivated.
Wow, a lot of people seem very motivated.
Oh, it's just the gully. That's all. Just nerves. So where do we stand?
I need to talk to my wife.
This market won't last.
Actually, could I talk to a mortgage broker? Anybody you recommend? Anybody you like?
Yes, I have someone, absolutely.
Yeah, bitch better like me. Send her ass to Cabo.
Well, he's a liar. Actually, in this particular case, James probably is wrong.
200% on all my loans?
What do you mean all your loans? We're talking about 2 loans on 1 house, right?
I have 5 houses and a condo.
Hey, there's a bubble.
How do you know?
Trust me, call Venet, buy 50 millions in swaps on the MBS. What do we got? Garibaldi 4 triple B.
Mark, you sure?
Yeah, it's time to call bullshit.
Bullshit on what?
Every fucking
Thank you.
Alright, welcome back, guys. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Just a guy on YouTube giving you guys my thoughts and opinions, talking about what's going on in the economy. Alright, so the market, oddly, is holding up. I've watched quite a few George Gammon videos, and they're pretty good. They were talking about how there's off-balance sheet entries on, the Fed's balance sheet. It's like a nice way of saying they're probably in the market buying things up and propping it up. So it's all fake. It shouldn't surprise anyone at this point. Anyways, looking at economic data coming out this week, and then next week we have an FOMC, which is a rate hike decision. It's I think it's very important what's going to happen this week and next week. We do have oil inventories coming out. Europe's GDP Q1 is coming out Wednesday, and inflation numbers coming out along with some jobs data Friday. Very important. If inflation is above 8%, I expect in reality it's probably even higher in the real world. If they actually measured it from how they used to, like in the 1980s and prior. But if it's high, right, that means the year over year, if it's still above 8% or higher than, or if it sets a new record above 8.3%, then they're going to raise interest rates more than 50 basis points next week on the 14th, I believe. Meaning the market will probably start panicking and will continue to sell off. Even though if you look at the technical analysis, it looks like everything has kind of bottomed. Not everything, but a lot of the retail sector, this and that. So let me show you. So we're going to look at charts, and we're going to talk about the news. I kind of want to talk about the news before I get into the charts. So here's the charts. Tesla in the upper left corner, Facebook in the center top, Amazon on the right corner here. This is Arc Innovations right over here. I mean, that thing has pretty much collapsed. Here's Netflix, bottom center, and Home Depot. I want to look at that as well. It's on the bottom right corner here. So retail and Target's doing real bad as well. I mean, over 50% drops from their all-time highs. Now, from all-time highs, right, to put into perspective, after 2020 COVID low, they printed trillions and everything just went up into a giant bubble, right? So those valuations were way over the top, and it coming down 50% from the all-time high may seem like a lot, but in retrospect, it's not because it was a bubble. So something could fall 90% and then drop another 90% just because the TA looks like it's hit some support areas and it should bounce or rebound, recover. That's not always the case. If you follow me on my Twitter, I was very active today. Yeah, I was posting this. It's unbelievable they're coming out and saying the economy's in the best recovery ever, because it's obviously not. It's pretty bad out here. So I posted this. Inflation will never drop because there's less goods, services, and forever increasing energy costs. The ruling class is shutting down oil exploration, production. We are literally going back to the Stone Ages. Yeah, I mean, crude's at about 120 right now, barrel. And in my last video, I'm like, they really need to bring it down at least into the 90s, right? Low 90s or hit $90 a barrel. And prior to that, I'm like, they have to get it down to $80 a barrel, but they're not. And it doesn't make sense what they're doing. It's like they want one thing, but they're doing absolutely everything opposite of giving any sort of relief to the economy and the people. China is about to come back, is coming back online, so demand for oil is going to increase. Things are still escalating in Eastern Europe, and they're still not renewing all of the leases on federal land for oil drilling. And that includes the offshore, like in the ocean, those huge rigs that drill for oil. And guys, I don't want to hear this bullshit. There's plenty of oil. There's plenty. It doesn't come from dinosaur bones. Like, you guys believe that nonsense? Are you kidding me? I don't even want to go down that rabbit hole. It's all nonsense. But that's what they used to teach us in school. If anything, it's probably just bio-waste from like trees and plants dying off, and then that seeps into the soil, into the Earth's crust, and then compresses with rocks and pressure and creates black gold, right? Oil. And there's probably thousands of years worth all over the place. You just got to find the pockets and go a little bit lower drilling wise, which is technically really just innovation and technology that gets us cheap resources, and we have plenty of, right? So they were talking about doing price controls. Now, how many times in history does that have to happen for people to realize that that just creates shortages? And I wrote, the oil tax trickles down into service costs and consumer goods, causing more inflation on top of currency inflation. Corporate profit margins are squeezed, then they go into the red. Stock market crashes. People can only afford the necessities, food, shelter, and utilities, and the price of all those things are only going up as well, because the entire United States and the rest of the world, entire humanity, really does run off of oil. It does. And they want to just get rid of it. Like, they're not renewing leases to drill for more. Production has halted. Energy independence gone for the U.S. And some is being shipped to Europe, I hear. I can't confirm that. I just didn't look into it. So gas prices are going to go higher, which is insane. Because at the same time, they're saying they're fighting inflation. There was a hearing today with the football head, Yellen. She used to be the former Fed chairman, right? And she's admitting she was wrong. No, like, they were always just lying, but she's warning we have to get serious on inflation. And I feel like, yeah, they're trying to talk the markets down, and the market's sort of sniffing their bluff, but at the same time, they really do have to raise rates, even though it's going to crash some of the economy. Because if they don't, things are accelerating at a pace which, I mean, in 2 months, the national average could be like over $7. I mean, what happens then? Because everything runs on it, right? Your delivery, You can't manufacture anything without oil. Everything is transported with it. Everything's packaged in it. Everything that's plastic is made from oil. Rubber, oil. Silicone chips, semiconductors. Everything needs oil. If gas prices keep increasing, right now the national average is at $5. People have zero money left over. And then eventually they can't even pay their bills, right? And this could happen quickly. Like, it's already happening. People's savings are disappearing. Credit card expenditures are through the roof. Where was it? I mean, this is it. I think they've lost it, man. What are the numbers for how many credit cards? I know I tweeted it. I don't know. Anyways, I'll find it later somewhere in all my tabs. Oh, and they're also talking about more ethanol, which is corn, in your gasoline, which will ruin everyone's car engines and lawnmowers and everything else because there's carb buildup. So the Fed repo facility usage just hit over 2 trillion. 2 trillion. The entire economy, supposedly, if it wasn't in a bubble, it'd be much less, probably half, if not 1/3. But the entire economy is like 15 trillion, maybe 18 at the most. But, like half to 2/3 of that is probably fake because we're in a financially induced debt bubble, right? So that's happening in the backdrop, and these people are clueless. She's like, oh, I bought my Tesla, and I just drove it across the nation. And everyone should be doing that. Yeah, like everyone's going to buy an $80,000 giant golf cart. By the way, it takes a lot of oil to create these. And the rare earth minerals and commodities to make the batteries and to make these EVs. Guess what it takes to drill and mine for all those resources? Oil. So the price of oil goes up. Mining expenditures to create everything goes up, and usually it's a little more exponential or compounded when it goes into not labor but manufacturing or mining. So what I'm trying to say is half the inflation is just oil at this point. Yet because their new Green Deal, they just shut off all production. And then remember, we're still everything happening today is a byproduct of the supply chain being broken 2 years ago with the lockdowns as well. Like I said, you can't just shut off an economy and its supply chain, which is just on time shipping, right? And delivery globally, and then just turn it right back on. Because, it breaks it, and it takes years, if not decades, to rebuild. So they basically destroy their own globalization. Hilarious. That's why, half of me thinks like they're geniuses and they have it all planned out for their world economic reset thing. But the other half of me is like, I don't know. I think their hubris is they're so disconnected from reality because they're all rich, right? That maybe they are idiots, and they've broken such a complex and delicate system that every time they go to fix it and hold it together through micromanaging, they just create more problems and break more things. A good example would be they want to do price controls. Why do they want to do price controls? Because we have high inflation. Why do they do inflation? Why do we have inflation? Because they kept printing money and propping up the global economy, that needed to crash back in like 2008 and whatnot. And I'm talking, it needed to crash bigger than the Great Recession. Why did we have the big Great Recession? Because they financialized everything. Why is all this happening? Because they live, I don't want to say they don't care about the future. It's like they don't plant trees for their kids. They only care about the present and extracting as much power and wealth out of the present by sacrificing the future and not preparing for it, which is not the sign of high intelligence, in my opinion. Like they're not the all master wizards in control of everything as people believe. Or, even with all the algos on social media and everywhere, they make you believe everything is planned out and that they're in full control. They're not. They're really not. That's why I'm not worried. I'm pretty chill, guys. I'm actually looking forward to the future. But we're going to go through some serious shit on the way there. And honestly, the worse it gets in the short term, the better it'll be in the future if you make it to the other side. And you got to be very self-reliant to do that, and most people are not. So yeah, anyways, here's a good tweet. So here's real home prices. I believe this is adjusted for inflation, or maybe it's not. I'm not sure. The blue line. Here's real building costs. Recently just spiked massively, right? And it's been going up. Remember when lumber went up like 4x, 5x, something insane? But it has come down since, but it's still higher than it was 2 years ago, right? Here's population growth. That's probably going to taper off, right? For, if you can connect the dots, I believe it's going to taper off, unfortunately. And then here's interest rates on mortgages, right? The interest rates have bottomed. Now, everyone's thinking, and so is Wall Street, like, they're not going to really raise rates any higher, and they'll cut them. And even I think that, and they'll cut them and then do more QE once everything starts really falling apart. But they really do need to do something to bring down oil and to bring down inflation. Because if they don't, I mean, at the rate we're going with inflation and gas prices, like 2 months from now, it's going to be really bad, like Great Depression stuff. Right now, we're in a recession. It's just nobody, wants to admit it because we're waiting on Q2 GDP to come out. And even if they fudge those numbers, I mean, we're in it right now. It started like at the end of last year and the beginning of this year, all right? And I've been saying that since. But yeah. All right, let's take a look at more news. Okay, so stocks and bonds spike. So stocks went up in the past yesterday and today. Today's Tuesday. It's the 7th. On fears of stagflation. Yeah, but okay, so we are in stagflation right now. We have high inflation. So if the Fed doesn't raise interest rates for the short term, like maybe this will be the last time they do it, but they kind of got to do a big one. Because if they don't, I'm telling you, man, inflation will be really high like next month, and then the psychology of the masses take over, where they start buying things because they're scared of the prices being even higher the month, like later in the year, right? Which becomes like a death spiral, right? Where everyone starts doing the same thing, and then that creates even more and more inflation and more inflation as people start hoarding and getting rid of all of their cash as fast as humanly possible. So psychologically, they can't let that happen. So what should they do? If I were them, what I would do, if I was in their shoes, I would raise it like 1 full percentage, or maybe 1.25 basis points, like 125 basis points. And yeah, that'll crash the stock market, and people are going to start losing their homes and all that, like back in 2008. But if they don't do that, the alternative is even worse. By year end, it's like, I don't know, runaway inflation. And then all of that will happen anyways. Like everything will crash anyway. Can the stock market just go up during that time? I guess. But that's going to, I believe that'll happen later in like 2023 and 2024. I just think right now, in the moment in time we're in on this timetable, they need to further dump the markets, and they somehow got to get commodities down and put the economy into a mini recession, like a mini depression. And then later this year, they stop raising rates, start cutting, and then QE infinity on steroids again to get us out of it. And all that does is just buy a few more years until, like, I don't know, runaway inflation or wherever the hell we're going, just full on collapse. So here we go. Shocking. Consumer credit numbers Everyone maxing out their credit card ahead of the recession. Here's total consumer credit. It's like hitting a record. And you can see what people are buying. And apparently they're buying gas and food. Non-revolving credit. Where is 2008? Let's see what it looked like back then. That's this little square right here. Yeah, I mean, look how much more indebted the public is right now. And yeah, it would technically go up because currency is worth less, so people's pays went up a little bit, and so they could take on a little bit more debt, but not this much. People's wages have not gone up this much in the past 10 years. So basically, people are just more indebted than ever before, and all it took was higher gas prices, right? And then I'm sure COVID had something to do with it. Total revolving credit. Yeah, it's hit all-time highs. This will probably do a blow off top by the end of this year, as people become desperate and they have no choice. So here's student loans. Wow, that's still going up. And car loans, well, that's also going up. Here's the personal savings rate. Remember how high it was like late last year, early this year? It's plummeted. It's gone. All that stimmy money, gone. It's gone to higher food and higher utility costs. Higher taxes, property probably, gas, you name it, right? And that's how quickly the money. So stagflation, right? To get into stagflation, you're in a recession / prices are higher than normal, and everyone thinks inflation will come down. This is why these people are not that smart. None of them ever had real jobs, right, or owned a business. But they think, which these academia, right? That's why they're not as smart as everyone thinks. They're not as in control as everyone actually thinks. And, here, let me prove it.
Nobel Prize in Economics released a letter in support of the president's Build Back Better plan and his economic
Nobel Prize winners recently highlighted in an open letter
is to highlight the fact that it's not just us, but it is a range of economists. It's 17 Nobel laureates who have.
And it was totally paid for.
The impact of inflation.
17 Nobel winners of the.
All right, you guys get the point, right? They don't understand that there's less goods and services. They can't print gas. They can't print food, and they can't print productivity. They could only print currency. So even if the stock market crashes hard, temporarily it will bring down inflation because people can't sell stock to buy things or cryptos. It will also bring down the oil and gas because people will drive less. Because they have nowhere to drive. A lot of people won't have jobs because there's going to be massive layoffs. And people, stop going on vacations and whatnot. And just using up resources because they don't have the money to. So that will bring down the the price of gas temporarily. And retail sales, businesses will start going under. We've seen recessions before, right? And that'll bring inflation down temporarily. But then people are complaining because of the economy's, in the shitter. So then they're going to do what the only thing they can do or know to do, because they're not that smart, is do more QE later. It's just, that's all they do. They're like, they think they're driving a car and they're hitting the gas and hitting the brake. But that's not how real economies work. Real economies you can't manage them like that. The free market just does it on its own. You just leave it alone. All they really have to do is just leave everything alone, and then it'll fix itself, and everyone will be better off in the long run. But they can't do that because they're only short-term thinkers. They don't want to lose their power, their political power, and this and that, right? So that's the problem with central authority. Atlanta Fed slashes Q2 GDP again, now just 0.9% away from official recession. Yeah, I think GDP numbers should be negative, more than the last negative 1.4 print for Q1. But we'll see. I don't even trust their GDP numbers. Canada, But here's a good, example of how a market works. If you try to do prohibition, what ends up happening? More of what you prohibited, because now it's profitable and people want it even more. People always want something they can't have. By the way, I don't know. I'm not going to talk about it. All right. So investors are terrified. So why aren't they selling? And I believe this title, this is authored by Lance Roberts via realinvestmentsadvice.com. This article. What I believe he means by investors is the retail investor. I mean, they should be panicking, but they're just not. It's weird. It's like they're very docile. But they really should be. And I think that capitulation moment, we're very close to it. If the market doesn't rebound and go back up this week, and I don't think it will. I think it's going to sell off before the weekend because the market's waiting to see how high the rate hike will be. And like I said, I wouldn't be surprised if it's a high rate hike if Powell is smart and they really do want to stop inflation before it gets out of control. They kind of have to do that, like it or not. So I do believe there's more downside, even though if you look at the technical analysis, it looks like it's kind of bottomed out. But, there's a lot of good charts here. Here's retail investors' allocation to stocks, bonds, and cash. They're really heavily overweighted in stocks and very low on cash. And they're probably margined up, so that full-blown capitulation I do not believe has happened yet, or they just sell the bottom because it's too painful, and because they probably need the money, right? Because the cost of everything is going up. U.S. national gas average approaches $5. A little demand destruction emerges. Yeah, I believe in Cali it's probably over $7 now. So, meanwhile, one gas station in California is just pennies away from $10 a gallon. Holy shit. So, I don't want to scare anyone, but I'm pretty sure at $8 a gallon, everything just kind of stops and shuts down and breaks. And everyone gets laid off and food just starts disappearing at the stores. And no one can afford to buy anything at that point because going to work, there's no point of going to work if 1/3 of your paycheck is gas. Now your lunch, you're gonna stop eating out now. So you'll bring peanut butter and jelly sandwiches, but even that is more expensive. And then if you get a pay raise, you're in a higher tax bracket, so they take a bigger percentage of your pay. By the end of the year, you got nothing for any other expenditures besides buying food, paying for your car to get you back to your slave wage, and utilities and the shelter over your head. Here's gasoline consumption, million barrels by day. So it's actually a little bit lower than in 2021, and it's definitely lower than 2019 because everything was normal then, right? So this is by Wolf Richter. Yeah, I mean, some demand destruction is naturally gonna happen. People just stop driving less because they literally cannot afford it. And this is after used and new car vehicle prices exploded. Used cars went up by 40 to 60%. Depends what you were buying or whatnot. But everyone pretty much in the past 2 years got wrecked. Yeah, some people did good on the bubble rally in the stock market and cryptos, and if they took cash at the tops, they're really lucky, are really smart, and they played it well. But everyone else just wrecked. A lot of people also get paid in stock options, right? As bonuses for corporations they work for. and now that's not worth a lot less. At least got cut in half. So the wealth effect for people is gone. They felt rich. 6 months ago, everyone felt so rich. Everyone was going out shopping because they're wow, look at my stock portfolio. Look at my retirement. Look at all that. And look at the value of my home going up. Even my used car's worth more. Everyone thought they were rich. Well, not anymore. Target crashes after cutting profit outlook for second time in 3 weeks due to excess inventory. Yeah, this is happening across the board for retailers. Now what are they going to... So I believe during the winter they stocked up their inventories in anticipation of inflation. But now the retail consumer got wiped out and they can't buy their inventory. So now they're like not selling anything and just have inventory in the back. And I don't think they're going to slash prices by a lot. Maybe a little bit to get some sales, so their quarterly reports because they're publicly traded companies, doesn't look devastated. So they have to sell some goods, right? They need inventory turnover, some sort of sales, right? Gross sales. But they can't afford to slash the prices by a lot, because then they're losing money on their own inventory that they purchased because they started realizing that inflation isn't coming down. If that makes sense. What else? Listen, the whole world is kind of in the same territory. I believe China is doing very bad right now. Like, they have like food shortages and whatnot, and they're... Remember the ghost cities? Those videos I used to show you guys? Yeah, I mean, they have an even bigger bubble. Which makes me think that geopolitical stuff globally is going to only intensify this decade. So, I don't know why I left this page up. Okay. David Stockman, inflationary pressure is worse than they say. Honestly, I believe right now it's like around 20%. I could be wrong. I mean, it might be only 14 or something, but it's bad. Because think about it. Your home value appreciation, your utilities, your food, your gas prices, it's not like really included in their inflation numbers. It used to be back in the 80s, but yeah. Alright, let's take a look at some charts. Here's Bitcoin. It's on my blue line support. I believe it's going to dump. I believe big money is making this trade sideways for some time here so they could unload. You know, they could do some tricks with these exchanges to provide liquidity. These are looking like Bart Simpson patterns again, and that's probably a sign of them slowly offloading their bags, and then eventually it'll drop. I mean, this looks like also a bearish pennant. Nothing has changed there. So more downside for cryptos. Alright, CBOE 10-year... Okay. Here's the 10-year yield. Interesting, right? So this blue line with the area shaded in is the 10-year yield. It's at 2.971%. Now remember, I drew some lines. I know I marked these. I don't know. Hold on. Why did... I guess it went away. Doesn't matter. But if you look here, the 10-year yield goes up, stock market dumps. So, and the orange line is gold. And so does that with it temporarily. Short term. Knee-jerk reaction. And because maybe oil goes down, because metals and commodities do kind of trade with energy costs, because it costs higher energy to mine commodities. But if we're going into a recession, and this should be apparent probably on the next GDP print, so I'm not exactly sure when that is for the US, but probably by the end of this month. No, maybe next month. So by the end of July, everyone will know shit is sort of hitting the fan, and then that'll be the catalyst for oil to come down, at least back down to $90 a barrel. But I do believe gold and silver will smash down with it again, temporarily. And then once the Fed capitulates, does yield curve control, and does more QE, that's when it's the commodity super cycle over a lifetime. Platinum, palladium, uranium, copper, silver, gold, uranium, all the natural gas, like oil. This will be the decade for all of these things. Agriculture. By the way, agriculture, here it is. One of the guys, he's been in the markets for decades. He suggested this agricultural ETF, and it's like a good staple to have in your portfolio, right? As agriculture is only going to go up, especially in a recession. At the end of the day, everyone's got to eat no matter what. So it's up 100%, I believe, and it's just a nice thing in your portfolio to get you through the volatility. It's up 74% from the bottom, and we bought the bottom. So it's just having a few of these in your portfolio. It's like a nice core. It's like a backbone to it, especially if you have a margin account, right? It keeps your portfolio level because it's not really correlated with anything else. It's just going up during hard time. Here's Spider XLE ETF. This is oil producers. And I traded this in 2020, did really well, but I got out too early around $55, and it's gone up much higher from that. Since oil went negative, what was that? That was Contango or Vertigo. I forgot. Whatever. But since the COVID bottom, it's gone up like 240%. So that was great. I am looking for a dip buying opportunity. So when everyone realizes we're in a recession, oil should come back down as people expect less demand, right? Less economic activity, less traveling, less shopping technically it means less demand. But the problem is it's not really on the demand side. The problem is on the supply side. And that's because of their Green Deal thing. They want us to stop stop drilling for oil and refining it, which is like their insanity, zero carbon, new world order thing where we're all gonna just be cavemen and die or whatever the fuck. So they're insane. It's gonna lead to very dark days for them too, like I believe. Because people they're getting pissed. Here's light crude oil futures. It's at 120. Not far off. It spiked up to about $130. We'll hit back in the day it did go to 150, didn't it? In 2008. Yeah. But here's what's funny, right? So when oil went to 146 back in 2007 and 8, 146, the highest gas prices got were like $4. And that was insane. I remember that. Okay, well, it's only at 120 now, and we're seeing $5 national average, and Cali has like $8, $7 gallon gas, right? Why is that? Well, that's because supply chain issues, less supply. Like, we just have less supply because they didn't renew the pipelines and the leases. So this is purposely sabotaging your own economy. And because the dollar itself is worth less, right? So this is what I meant by, TA-wise, it looks like we found support and the price should go back up, right? And rebound and reversal. I don't think so. I think they're going to have to raise rates substantially next week. And this will be a dead cat bounce. And then down she goes to my blue line on the NASDAQ. Around 9,000, like 300, something like that. Or at least retest the 200-week moving average on the NASDAQ. Which would be 10,772 or 1,100 or 11,000. We need a capitulation. We need a sharp drop. And that'll signify the recession, and then GDP and economic data will come out and confirm it. But right before that, they have to raise rate more, because if they don't, it's not going away. The inflation will only keep getting worse, and I know they're in a bad spot, right? No matter what, it's gonna lead to the same outcome, which is like economic, devastation. But at least they could buy themselves more time if they raise rates now, and they purposely dump the markets, purposely get the housing market down, gas down, and everything, because then that gives them room later to do one more like bailout of the economy and QE, right? But we're not there yet. Like, the market could drop much more. Like, in the grand scheme of things, if you zoom out, it's still pretty high. It's still up there. From 2000 and... from the bottom, right, of 2009 here, the NASDAQ has gone up from like 1280 all the way to 16,200. So from 1,250, something like that. All right, let's see how much of a gain this puppy is. See how rich these boomers got. Wow. So the Nasdaq from its low since the Great Recession in 2008, 2009 to its all-time high went up 1,191%. And that's an index. It's not a stock, right? It's an indice. So what would be a nice, like, 70% drop? Something like that. Well, to my blue line, it would be just a 40% drop. So why not? It would still be higher than its previous all-time high before COVID. It'd be right around there, right? So why wouldn't it fall another 20%? Why not? That's what I'm looking for, and that's what I'm waiting for. Once this plays out, guys, I'm going to load up on all the commodities, especially silver and gold mining stocks. And then you just have to relax and watch the show. And then look for new mines and new companies or mergers and acquisitions. And then we're going to have a great time. But right now we're just in that point where we're in the middle of the storm. We're in the eye of the storm, right? So I'm hoping, well, not hoping, but from my reasoning and logic here that I'm going through here, they have to do like a decent sized rate hike next week. That'll dump the markets, it'll stop inflation, and then maybe later this year or the early next year, once things are really, really, really bad, they give up. The Fed loses all credibility, and then they do more QE and yield curve control and money printing, and that's it. And they'll do that into pretty much that's pretty much in line with the next big election, right? Like these cycles are just kind of like turning out to be that because of humans' nature to want power and control, right? So it's kind of how I view things on a real macro level here. Alright, smash some likes. Please share my videos. It's the only way my channel grows, and I'll keep doing this. Go to my website. Join the private group. It's a community of very smart people. Maybe some not so smart, but most of them are pretty smart. And then, we look for opportunities. And I have free chat groups. Follow me on Twitter. Smash the likes. Hit the bell. And all that. Until next time.